Hello guys, welcome back to another video with Boy Trader. And today's video we'll be talking about trend lines. What are trend lines, or what is a trend line? A trend line is a line drawn over pivot highs or under pivot lows to show the prevailing direction of price. Like, they are lines drawn over the highs and lows of the market's pivot points to show the market direction, to show the market structure. Trend lines are visual representation of support and resistance in any time frame. A trend line can be shown in or identified in any time frame, be it the 1 minute time frame, the 1 hour time frame, the weekly time frame, the monthly time frame, the daily time frame. Whichever time frame you're on, a trend line can be identified. So we'll be going into the technical explanation of trend lines and how to apply trend lines, and I'm showing you guys the trade I took using a trend line strategy or using a trend line approach. But before we get started, if you're new to the channel, please do it to subscribe, and to my returning viewers, shout out to you guys. You guys are the OGs. Let's keep doing what we do, guys. So let's get to it. This is basically how a trend looks like. This is an uptrend. Let's spot a trend line in this uptrend. Now we have seen the market direction, the market moving to the upside. Basically, we have seen the market moving to the upside. Using a trend line, you'll be able to identify the market direction. So right now we have seen the market pushing to the upside. So when the market creates higher highs and higher lows, it's shown or it's described to be an uptrend, market. Right now you have seen the market create what? Higher highs and higher lows. There are points at which the market gets to and reverses, like the market moving in an orderly form. You can see the market got to this point, created a high at this point, moved to the downside, created a high, moved to the downside. The market created a high at this point, then followed up was another high, basically a higher high. Why is it a higher high? It's called a higher high because this our previous high is lower than this high, and this our recent high is actually what? Higher than this our previous high. So right now we identify another high as well. So you can see the market is pushing to the upside with this orderly manner, giving us a step-like formation. Like the market is moving in a step form, showing us that the market is trending to the upside. Just like when you're climbing a staircase, you can see we move higher, like from a lower step to a higher step, from the current higher step we on to another higher step as well. That's what this is actually explaining. So we have seen the market giving us what? A higher high at this point. Basically we got another what? High, and this high we got now is higher than this our previous high. So this is technically a what? A higher high. So right now we got another high as well at this point. So you can see the market doing what? Creating higher highs, and basically the market is as well creating what? Higher lows. We got a low at this point, then we can see the market giving us another low. This low we got at this level is higher than this low we got at this point is higher than this our previous low. These are highs and lows of the market trend. So we have seen that the market is creating another what? Higher low, and the same thing at this point as well. The market keeps creating higher lows. So we have seen that the market is trending to the upside, and the highs and the lows of the market are actually their support and resistance. And this level is the trend support. Why this level is the trend resistance? Why is it the trend resistance, and why is this level the trend support? Because you can see a support is actually a level at which the market gets to and reverses and changes its downward direction to the upside. So you can see the market giving us this level, bouncing off this zone, coming back to this level, bouncing off this level. So this our trend line identified at this point is actually a support in the market. So because you can see whenever the market gets to this point, it bounces off. Whenever it gets to this point as well, it bounces off. This is actually a support. This support is holding the market from pushing to the downside. It's holding the market from dropping downwards. So this is actually a support level. Why this level is a resistance level? Because this level is preventing the level from pushing to the upside. The same thing is happening here. Whenever the market gets to this our trend line, it pushes back down. So this is actually the trend resistance. Why this is trend what? Support. So we can see at this point we got the market inwards, creating lower highs and lower lows, trading to the downside. So when we see a formation like this in the market, what's the market telling us? What information are we getting? You can see the market is doing what? Trading to the downside, creating lower highs and lower lows. Information is like this. The market keeps creating a lower high and a lower low. Basically we got a high at this point, which is being identified right now, and we got another high. we got another high basically. So this high we got is actually lower than this high. Like this high, you can see the level of this high, the level of 1.24. You can see at this point, this price level. Let's look at this price level. So this high level is actually at the 1.24202 level. Why this low one is at the 1.23702? You can see the price level keeps dropping, like keeps reducing. So that's the explanation of the lows. Like this particular low is lower than this low. That's why we got a higher number at this point and a lower figure at this point. So let's identify another lower low, a lower high basically. So we got the market creating what another level as well, 1.22. Remember this previous low was 1.23. You can see the difference in price. So the price keeps reducing because the market is creating what lower lows, lower highs, sorry. So let's identify the lows of the market as well. So as you can see at this point, we have the lows. In a downtrend, we have a lower high and a lower low. We have actually identified our lower high at this point. So we want to identify our lower low. So we got a low at this point. Then basically we got another low as well. And we have another low formation. This low is lower than this low. Like we had a low at this point and we had another low at this point. This low we had is lower than this previous low. This low is lower than this previous low. So this is actually the trend support and this is the trend resistance, because whenever the market gets to this our level, it bounces off. This support level prevents the market from pushing to the downside, from dropping downwards or dropping further. So this point as well is the trend resistance. This level prevents the market from pushing to the upside or moving, breaking above this level, giving us an order movement of the market. So let's look at the technical implication of trend lines, and I'll be showing you guys the trade I took using this trend line strategy and how I was able to get into the trade. So you can see at this point the market was creating what, this is an uptrend. The market was creating what, a higher highs, and was creating higher highs and higher lows. So we got a low at this point and we got another low. This low we got is higher than the previous low. This is the previous low basically. This is the previous low we got basically. So this low is higher than this low. And when the market is creating higher lows and higher highs, it's actually trying to tell us that the market is trending to the what, upside. And we got one at this point as well. So the market keeps creating higher low at the support level. While at the resistance level, the market is creating what, higher highs. We got a high at this point basically, and we got another high. Even though it didn't touch, like it didn't give us an other touch of the trend line. So we got a high at this point. This high we got previously is higher than this last high. So this is actually a higher high, and we got another one out here as well. So in this our trend lines, there are horizontal support and horizontal resistance levels, because you're trading in an uptrend. So our focus will be buy opportunities. We're looking at for buy opportunities, because the buy opportunities will favor us more than the sell opportunities, because we're moving in an uptrend. Looking at for opportunities in the market when our horizontal support or horizontal resistance correlates or corresponds with our trend support or trend resistance, and we got one at this point. So you can see the market giving us what, after this horizontal resistance or horizontal support level that was formed at this area, you can see our horizontal support level matching up with our trend line. It's matched up at this point. It didn't actually match up at this point. So if the market is dropped to this point, we will not be looking at for any opportunity. We'll be looking at for an opportunity when the trend line matches up with our horizontal support. So, and we got one at this point. You can see the market gave us a touch at this point, a first touch, the second touch, and basically the third touch, and the third touch corresponded with our horizontal support. So we got into the trade at this point. You can see we entered at this level, moving our stop loss below our recent low. So we got a week. This week actually bounced off these points. Like this week showed us a strong formation of this our trend line. Like when the market got to this point, it created this week and bounced off. Then we had this inverted hammer. Then finally we got this bullish engulfing candle, which gave us our entry point. So we got into the trade in this bullish, in the closure of this bullish candle. So you can see how the market moved afterwards. So we held this trade for a couple of days basically. So we got into this trade in 11th April and we held this trade to about 14th April, like 2-3 days we held this trade, and you can see we got massive bullish moves in it. So we had about 4:1 risk to reward, and you can see how the trade moved afterwards. So after the formation, we had another formation as well. We can see we identified our horizontal support and resistance, which we spotted at this level. This level acted as a resistance. When the market got to this point, it dropped from this level, so it's pushed above this level finally. Then the market actually failed to give us a bounce of this level. So we waited for the market, because we're not actually looking at for any trade opportunity at this point. We only look out for trade opportunity when the trend line matches with our horizontal support and horizontal resistance. So we got the market giving us this what break below this level, then consolidated in this area, finally broke above it, then came back to test it again, giving us a confirmation of this our horizontal support. We are patiently waiting for the market to give us a touch of this our trend line, adding up with our horizontal support. So at this point, we got the market giving us doing what, bouncing off this level. The market came to this level, matching up with our trend, which is our entry point. So the market gave us a touch on this our trend line, adding up with our trend support, and we got the buy trade. You can see how well the market moved afterwards. So that's it, guys. That's how I was able to get these two trade opportunities, and the two trades went massively well. Like when I applied this market approach, this trendline market approach, and I saw good results from it. So hope you guys were able to apply this in your own trading strategy. Add it up to any way you trade, any way you approach the market, and trust me, you see good results. So thank you guys, thank you for staying to the end of the video. So to my new viewers, you guys should do it to subscribe, and to my returning viewers, shout out to you guys. Have a wonderful day. Peace out.